Impact investments are investments that are made with the intention of generating social and or environmental benefits, positive social and environmental benefits, and a financial rate of return. That rate of return may be below market or it may be market rate. And the impact investment can be an investment made in an emerging market country, Africa, Asia, Latin America, or indeed in a developed market country where there are areas that have been underserved by investment over the years. These particularly include inner city communities, rural communities, and of course the broad application of environmental sustainability objectives. You ask what drives it, and what I think is very important is the recognition increasingly that market-based solutions can play an important role in resolving outstanding social and environmental problems. It also corresponds with a belief that the resources, capacity, and the will of the public sector in countries throughout the world to address some of these issues has become limited. This has created an opportunity for the private sector and for individuals and investors to step forward to offer well-crafted solutions that may add significant benefit.
Can you give an example?
We've seen, for example, a number of transactions that I'll highlight. One would be in the United States, the development of Habitat for Humanity, of a flex cap bond, which allows investors to invest in a program which allows for the development and construction of what are called sweat equity homes, where very low income people participate in the construction of their own home with the support of Habitat for Humanity. And the financing of that opportunity is supported by impact investments that earn a rate of return which is quite competitive. That's an example. In India, for example, the development of the charter school movement has gotten significant and critical support from impact investors globally, offering the opportunity for children in the slums of Mumbai and other major urban areas who have not had access to schooling at all to achieve and to attend schools that are quality schools at a very affordable rate. And it also includes a whole range of issues around environmental sustainability, clean technology, et cetera, which are so important in addressing some of the issues and challenges of climate change as well.
So then the question is, what type of investors are best suited for impact investing?
Actually, impact investing is an opportunity that many investors of various types have an opportunity to engage in. So we see institutional investors as well as individual investors participating in impact investing opportunities. In the institutional side, you'll see foundations, you'll see development finance institutions, you'll see banks, you'll see insurance companies, you'll see pension funds participating in transactions of various kinds, as well as individuals, typically high net worth individuals, but also those of more modest means. What makes it suitable for those investors depends on, number one, the ability of the investor to be comfortable with the value proposition of the investment itself, what are its intended benefits, and to understand and be comfortable with the measurement of the social change that the investor is seeking to achieve.
What are key barriers for impact investing?
Impact investing suffers from the fact that it's a relatively new area of practice, that market mechanisms have not fully evolved and developed, and there's considerable fragmentation and opacity, which has made it seem daunting to some impact investors. We feel that there's an important role to play in encouraging better information flow, better research, better organization and mobilization of investors in this area, and the opportunity for investors to collaborate to create an effective language around how to measure and determine what the social benefits are that we seek to gain through impact investing strategies.
How will the global impact investing network accelerate the uptake in impact investing?
The Global Impact Investing Network, or the GIN, is committed to several things. First, we are committed to working with leading impact investors around the world to help them improve their practice, share the results of their learning, and collaborate in order to help build a field, build an industry that many will benefit from. So it's the engagement of investors, the building of the field, the building of knowledge platforms and sharing that become very important, that are part of what the GIN's task is. And we do that principally through what we call our Investors Council, which consists today of 47 leading international impact investors. In addition, we're working very hard through what we call our Impact Reporting and Investment Standards work, or IRIS for short, to develop a common language around social and environmental benefits that mean that investors and other stakeholders have an opportunity to understand and measure the change that we're seeking through these investments in a consistent way, to share data from different organizations on their social results, and to analyze that data and provide benchmarks so which investors and others can make judgments about the effectiveness of this work in advancing social and environmental change. We're also very committed and very active in generating research that is useful to practitioners, whether they be investors or social entrepreneurs, about the practice of impact investing, how it's structured, its due diligence processes, the return opportunities in different sectors and different geographies. All of that is part of that information base that becomes critical in building a market. And we also are working very strongly to engage with a wider range of investors and those who have interest in this space. We are working to extend our our reach into Europe and to work with investors in all parts of the world who see this as a potential opportunity for them and a potential solution to some of society's most driving problems.